Let's try that again. Morning again. Don't know what happened there. Virgin Media problems. Sorry about that. Just basically, I was like, I don't know if you heard, but I said both of my MT4 terminals were just disconnected, and they were both with different brokers. So I was like, that's weird. They don't use the same feed, and obviously then the internet disappeared. So I'm back. Morning again, everybody. How many people we got? 19. Oh, that's right. There's only 40 missing. Anyway, right. Where was I? Aussie, New Zealand. Yeah. So we were talking about the rates for the Aussie. 5% peak Bank of England rate fully priced in for the first time since April 21st. Okay. All right. Blimey, that's a lot. Okay. So yeah, we're talking about the Aussie rate basically, and that going up. So ADRs everywhere. Just be careful with ADR reversals. The New Zealand dollar is probably the only one I would want to take at the moment. Just because if this Aussie is going to push as the yen has, we've got that sort of movement coming. So we're likely to see a flag and then a break to the upside. So Aussie New Zealand is potentially a good mean reversion. M5 reversal alert. You've had that already and the retest this morning. So there's potential for this one to come back down. Somebody posted in the group this morning about having an issue with the EA not closing all trades, and it closed part of them. That was on the pound odd. So if you look at the pound odd, the speed of that movement and all these Australian movements, when that rate announcement came out, that was a completely unexpected rate announcement. So the market went absolutely crazy really fast. And what likely happened, and what happens quite a lot with MT4 and MT5, is you have an incredible amount of data coming into your terminal. And what tends to happen is it can't handle the processes. So if you've got like running 28 pairs on a VPS, for example, on an MT4 terminal, and at exactly the same time, it's trying to do hundreds of different calculations at the same time as there's a huge data influx coming in, it just won't get through all the processes. So if ever you get times when the EA has closed out most of the position and not some, it's usually just pure volume of data that it can't handle. So yeah, all these massive movements, there's a good chance that these will mean revert. There's also a good chance that they will just flag and break to the downside. Don't know which. So just be careful with them. And if you are going to take some of these Aussies, just one, maybe two, I'd be safe. I'd probably just try and take one if I were you. And Aussie New Zealand is probably the best one to take because it's the one, because these are powering up at the same time, Aussie and New Zealand. When the Aussie starts to wane, the New Zealand will probably start to dominate it. So that's the one that I would kind of go for. Other than that, you've got Euro odd. Obviously, that's dropped dramatically to the downside. We've got a potential reversal forming on that one. Pound odd is the same. Big drop to the downside. Reversal alert is just about to go in. There's your support rectangle there. So you're just about to get a reversal alert there. Potential fill on that. And then you got New Zealand dollar Swiss. So this is the only one that isn't related to the Australian dollar. This one's pushed up very, very hard. Obviously, the New Zealand will push with the Aussie. So there's potential for a mean reversion on that one there. But all the ADRs today, basically, most of that is all related to the Australian dollar. Just want to quickly look at all these yens. So on Friday last week, we had this this strong, or rather last Thursday, we had this big, strong movement started on the yen. So we had big ADRs put in on all the yen pairs. Aussie, New Zealand, Aussie yen's obviously not a good example, but as you can see, this yen mean reversion has not started. So the yen, where we had this huge move on some of these yens, we were expecting, or I was anticipating a quick pullback before another leg up. All we got was a flag break. So all of these yens are absolutely through the roof at the moment. You will be on these if you're using ADR reversals or mean reversion on hourly or 4 hourly. You're going to be on some of these yens. So potential for nice fills on these, but the money is flooding out of this yen at the moment. So as you can see, it's going for another ADR today. So off that big move that we had on Friday, did we get an? I didn't even look at the charts yesterday. Really, 80. Didn't quite get an ADR on that yesterday, but it looks like it's off for an ADR today on the New Zealand dollar yen. US dollar yen still pushing as well. So just be careful with the yens. Morning, everybody. I haven't said hello to. Morning, Diamond. Henry, US dollar yen. Yeah, this is US dollar. Yes, US dollar yen. So it's embedded on the hourly at the moment. Obviously, these yens going through the roof. The market was not happy with the yen on Friday. Don't know when this is coming back. This is a fundamental shift. So at some point, you will find that the Bank of Japan will intervene with this move. We're coming up to last month's high at the moment, which is here. So this purple line, that is potentially where we're going to get a bounce from on the US dollar yen. So don't forget, tomorrow is FOMC. So there's a big move potentially coming tomorrow evening on the Fed fund rate as well. So let's just quickly go over the news and what we've got coming up. So we've covered the Aussie. Totally unexpected rise on that. That's bullish. Australian dollar could be bullish for a few days on that one. This afternoon, we've got Low speaking. So Low could well undo all of this movement that we've had. So there's potential for that to happen this afternoon as well. We've got the CPI flash estimates for the Eurozone. Let me just quickly check the DAX. So your 5-minute opening range on the DAX this morning was there, just pulling back at the moment. This is potentially a reversal. I'd be much more inclined to short this today than long it. But so your 15-minute pre-market open was there. You went short, stopped out on the short, went long, hit target on the long. So the pre-market one worked beautifully this morning. Nice quick profit. Just pulling back on the DAX at the moment. So all these yens basically, just be very, very careful of them. So your CPIs this morning, we've got US dollar JOLTS job openings this afternoon at 3 o'clock, half an hour after the market open. We've got unemployment rate for the New Zealand dollar tomorrow morning. Then we've got a bank holiday in Japan. We've got ore speaking tomorrow morning. So there's forward guidance potentially coming tomorrow morning for the New Zealand dollar. That will be dependent on the unemployment rate. So we'll hopefully be getting some sort of forward guidance onto what's going to happen with that tomorrow morning on the New Zealand dollar. So potentially big moves on the New Zealand overnight. Unemployment change tomorrow ahead of FOMC. We've got PMIs in the afternoon. So tomorrow is just US dollar crazy. We could have all sorts of movement tomorrow on the US dollar. I would be very surprised if we don't get multiple ADR hits on the US dollar tomorrow. Another Japan bank holiday on Thursday. Then we go into the euro rate. Euro rate is forecast at 3.75. There is potential for that to come out at 4 as well and get an upset. So there is potential massive movement on the euro coming. Unemployment claims 1:30 on Thursday afternoon. Then we've got the ECB press conference where Lagarde will go over what's happened with the monetary policy and give forward guidance. So that's when we're going to see the movement on the euro at 1:45. We've got Macklem speaking at 5 o'clock, and then into Friday, we've got the unemployment rate for the Canadian, and we've got the unemployment rate for the US dollar, otherwise known as non-farm payroll. So unemployment rates. So massive news week. Lots and lots of volatility expected this week. So you need to be very careful with your exposure, especially on US dollar this week. We could see, and euro, we could see some very big moves coming a la the Australian dollar today. So if we get an unexpected interest rate rise on the euro, i.e. the 4, which is potentially on the cards instead of the 3.75, we could see a massively bullish euro and Swiss franc. So just be aware of those when you've got your exposure on your euro and your Swiss pairs. DAX just retesting the opening range again. So there's your ADRs. That's the news this week. There's not a lot of other news. Yesterday, obviously, we had all the stuff going on with JP Morgan buying out the First Republic Bank. it's very difficult to tell what's going on with these banks. This is the third mid-sized bank that has fallen over in the last month, basically. Fed swaps show around 2 in 3 odds of June pause after the May hike. Interesting. So that's what we're expecting, of 5% or 5.25 terminal rate on the US dollar. Just trying to find the JP Morgan. There we go. So basically, JP Morgan have bought out First Republic. So the reason we had all this money flooding out of the yen, well, there's lots of reasons, but we had all the safe haven money moving into the yen. The money flooded out of the yen last week, and I don't think we're going to see any more banking problems having money flowing back into the yen. So it's difficult to see how the yen is going to recover from last Friday at the moment. The Swiss franc should be the main beneficiary of any issues with banking moving forward, and potentially the US dollar. So we've got this banking issue now sorted out. The largest bank in the US, JP Morgan, has bought First Republic. However, this is how it all started in 2008. It started with Northern Rock falling over, and then another bank, and then another bank, and then literally every month a bank fell over. So, and that's what started the crash in 2008. So we've got a potential here for another issue where we suddenly see banks falling over and over again, mainly because the interest rates have gone up at such a rate. If their exposure on the housing market and in mortgages is too high, they will suffer. And then you start to get a run on the banks as the banks start to fail. So this is potentially the start of a new crash. And if that is the case, we want to be shorting indexes, basically, and longing things like the Swiss franc and the US dollar. So at the moment, we've got 3 banks gone in the last month-ish. They've all been sorted out. Now, the difference we've got this time round is last time there was not any regulation on what they were doing with their portfolios. We now have that in place. However, banks are notoriously good at coming up with new products that they can sell to each other, which is basically the old products they're not allowed to sell, repackaged with some new products, creating a new product which they can then sell on at a bad debt, a la The Big Short and all the films you see where market crashes happen. So we just got to be wary of that moving forward for the next month, I think, because this is now becoming a regular occurrence with banks going pop. So the main beneficiaries, if that continues, is going to be the Swiss franc and the US dollar. So if you wanted to get some long positions on things like CAD Swiss, actually, no, you want to pick something else Swiss. So shorting everything against the Swiss franc, basically, or longing the US dollar. If you believe that we're going to get more banking problems and that sort of thing. So just be careful with exposure on US Swiss and at the moment, obviously, on the yen pairs. So, but that's all the news that I've sort of gleaned over the weekend. There wasn't anything else particularly interesting that I saw coming through yesterday, apart from obviously what's going on with the banking system. And obviously, US dollar is going to be manically busy this week. Looking at the buyer's scorecard, there's not an awful lot that's changed on the buyer's scorecard. There probably won't be anything much changing on this at the moment either. So these numbers that we've got here are driven by obviously the key fundamentals. The key fundamentals are all still being pretty much the same in the fact that we're now expecting a 5% terminal rate on the pound. So again, bullish pound, we've got another 0.75% almost guaranteed. No rate change last time, so pretty much the same as the Australian dollar. We should see the pound pop soon when the next rate rise comes out. Inflation did not do what it was meant to do. Problem is unemployment is obviously not doing what it should do either. So everything basically is increasing and decreasing at similar rates across the board. Inflation is now starting to come down everywhere. Interest rates are starting to pause everywhere. GDP is starting to stabilize everywhere. Unemployment is pretty stable. So we're at the point, as I say, where we're hitting these peak rates, and it's the first people to start putting their prices down on interest rates are going to be the currencies that start to drop the first. We've no way of telling at the moment. But the Fed have just come out and said that we could be seeing 5.25 now be the terminal rate. So tomorrow's FOMC could be the last one. and then they're going to pause. The pound have just said that they're going to go up, so that's bullish for the pound and potentially neutral for the US dollar. Euro potentially bullish, that's going up to 3.75, potentially 4. So at the moment, it's very difficult to predict anything from a long-term directional basis, because there's just no way of telling at the moment when these interest rates are going to peak and stop and then start to drop back down again. So at the moment, it's just a case of business as usual, taking mean reversions, but obviously be aware mean reversion trades when you've just had a fundamental shift are probably not the best ones to be taking. I just close out some profit on something. New Zealand US. Sorry, trying to manage some other trades. Oil. Just quickly before I cover the RSIs. So the oil trade that I took last week, we were looking at oil doing its little gap fill, which it did beautifully. We came down, we pushed back up. I took a second position here, and then we went into drawdown. I was looking for it to come back down into this area to take another position. So I took one there. That was going to be the second entry. All we've done since then is kind of push back up to my initial entry, and now we're sort of stabilizing here again. So looking basically for a challenge of those highs, the $83 to $85 a barrel, but potentially coming back down to here first. So that's kind of what I'm expecting to happen on oil. I just noticed that I've got another trade that's just been taken on oil on another strategy, but from the price action here, we had this big drop down when we got that gap fill done. So we had that initial bounce on the gap fill. They came down and they slammed straight through that gap fill. But since then, we haven't found any more sellers come on board. So this, to me, looks like the move that we were expecting, which is the pullback push. So any oil reversal alerts you get, potentially are good looking opportunities for starting long positions. So there's one there. Obviously on the hourly, looking to push back up. Any trades you get on lower time frames, potentially long, obviously good opportunities as well. So I'm looking to build a long position basically on this, but I have got a cutoff point on it. So if we do break down, just zoom out so we can see where it is. If we do break down sort of below this high here, 200 ADR basically from where we are at the moment today, that's when I'm going to close out that initial position. I may well keep that second on if I get that second on, if it comes down there, obviously. And then maybe play a stop somewhere around there on that one. But I'm always playing oil with a stop because I don't know it well enough to position trade it really, and it can move very quick. But as you can see, if you look at it on the 4-hour chart, that's our peak formation low. We came down, we took out that low from that range. We broke back up, we took out that high, and now we're pulling back down. So that's kind of the 50% retracement that I would expect to come back up to challenge that $95+ a barrel, which is the annual target. So off we go there. Aussie dollar yen in terms of RSI. What do you said euro odd? I haven't said you anything about euro odd yet, I don't think. Oh, it's an ADR extension. Euro odd. So I've just got into a long on that on a 1-hour M5 reversal alert. So the entry was there on that reversal alert there. We just got invalidated with a low. So there's your W pattern. There you go. That's euro odd. Swiss yen, highest ever. Yeah, so the Swiss yen, we were looking at this one last week. So this Swiss yen, as you can see, going back onto the weekly chart, yeah, this is just all-time highs we're at now. Yeah, so there's nothing stopping this Swissy yen at the minute. If we get a 4 on the interest rates on the euro on Thursday, this thing's going to take off. So just be a little careful mean reverting this one at the minute, because if the euro does get a pump on Thursday, the Swiss is going to go with it. So if you're in any shorts on it at the moment, targeting these downsides off the back of this yen move that we had last Friday, you just want to try and get out of them this week by Thursday if you can, just in case. Just had a reversal alert there on the hourly this morning. So that was the last hourly there, which was there. So since we made that high, that's the first reversal alert you've had. Didn't get one yesterday apart from there. So yeah, like this to the downside at the moment. We are massively extended on all these yens though, and this is the money just flooding out the yen. They are not interested in this yen anymore. So you just got to be a little careful with this. I get the feeling we are going to get this reverted. This move was the biggest yen move I've seen. I think I've probably ever seen. Apart from the intervention, when they're doing intervention, this was just basically money collapsing out of the yen at a rate of knots. So I think we will get a mean reversion on this. There's a lot of people that are in this long. I say people, institutions, banks that are in this long. They're going to want to take profit on this, especially with FOMC coming up. So we've got interest rate rises on Wednesday, tomorrow for the US dollar. We've potentially got interest rate rises, which is going to affect the Swiss franc on Thursday. And then we've got all the unemployment figures coming out on Friday for the US dollar as well. So I think they're going to want to unwind some of this yen. So I get the feeling we might actually get a fairly quick downside movement on this, either maybe today, if not tomorrow, or possibly in FOMC. And then obviously they can, once they've got the profit off of that, they're free to do whatever they want, which I suspect is to push everything against the yen again. So yeah, just be careful with that. It is an all-time high. When you get to all-time highs, you tend to get exhaustion. The market has to push so hard to get out of those highs, it generally doesn't have any left. So you tend to get a decent pullback when you push those. The weeklies that have been hit are all basically Australian dollars at the moment. So again, all these Aussies, you've hit your weekly basically. There's Monday's low. That's 147 pips on Aussie dollar CAD. 137 is the weekly range. But we've done the weekly range literally in an hour. So these aren't necessarily great mean reversion opportunities either, because this has all been caused by an unexpected fundamental shift in interest rates. So just be careful with those. Whipping post. All the JPY is on bank holes. Well, yeah, I mean, but you know, it's just because the yen, Japan is on bank holiday, hasn't got anything to do with the yen movement necessarily. All this has been caused by the US markets. So, and the US isn't shut. So, morning, Michael. Euro odd, looking like a good long. Yeah, potentially. So, for the longs, Euro odd is very, very nicely extended. Obviously, this is based on this fundamental. So the difference between all the other Australian pairs and the Euro odd is that we've got interest rates rising on Thursday for the Euro. So that is going to be bullish, potentially Euro, depending on what they do with it. So potentially a good looking move on the Euro odd. If you look at where we are from a support resistance perspective, we've just slammed down through the last 2 weeks worth of support, basically, which is there and there, those black lines. And the next support basically is back down here, which was 2 weeks ago's low. So that's basically the next level I would suspect that we're going to find a bounce. So if we can push down to there by Thursday, that would be absolutely brilliant for a long opportunity. We've got this propulsion gap target to the downside, but obviously we got a lot of movement on the euro last week. This has been undone basically. So the week before last, this has been undone only because of this fundamental shift in the Australian dollar. So if anything's got the power to undo this Australian move, it's going to be the euro, because it's got interest rate rises coming this week. So that does look like a good long opportunity. Got a long on there on the hourly RSI extension. You've had your 5-minute reversal alert, which has just gone in this morning. So yeah, long on that one. But there is every possibility this could push down further yet. So I think there's definitely more downside on it. But only down to kind of this area and this area here. So it's another basically ADR roughly on from where we are at the moment. So if you get into one here, you can scale into a couple down to there, and then Thursday, potentially this will skyrocket. It could well just undo it today. We don't know. The market, when you see these big moves, you can never tell. When you get an unexpected interest rate rise, the market hasn't factored that in, which is why you get this knee-jerk reaction. So what happens is the interest rates come out and they go, oh, right, we need to reposition ourselves. So what they do is they just reposition the money, and then they will do the analysis, and then they'll look at it and go, actually, looking at it, it doesn't look like they're probably going to do the interest rate rise next time. So let's undo what we've just done and factor in a flat rate. So you either get one of two things. You get them go, oh, crap, yeah, we should have gone, and then they push it, or they push it because this is a knee-jerk reaction. Yeah, this is a panic buy stroke sell because they're caught offside with the interest rates. So they're exiting or adding into positions to get themselves in the right place for where they need to take their profit. If they suddenly do the calculations and then go, we get that V-shaped recovery. And we see that a lot with interest rate rises and all news events. You see that big knee-jerk reaction, and then you see immediately that recovery, which takes no more than 24 hours. And that's what we call a V-shape or an A-shaped recovery. So you're either going to get one of those two things happening. If they look at it and go, yeah, actually, Aussie's going to look like it's strong over the next quarter, bang. They will just get a flag break continuation. Or they'll look at it and go, nah. So we don't know. No one can tell you that. So you just have to basically either get into your position and you'll get out, or you'll get into your position and you have to scale in. But the best things to get into are things you've got fundamental news coming on. So Aussie dollar, US dollar, obviously is a big one because we know we've got US dollar potentially, increasing their interest rates again on Wednesday, tomorrow. And then we've got the unemployment claims on Friday. So there's two reasons for the Aussie to potentially power up. There's also two reasons for the US dollar to power up. There's also two reasons for the US dollar not to power up, and this Australian US to go through the roof and do 3 or 4 ADR against you. So just plan basically and make sure you don't overexpose. Pound CAD. Just sideways at the moment. Out of shorts on this. Got out of all the shorts on the pound CAD. Actually, no, I didn't get. That's a lie. I didn't get out of all the shorts on the pound CAD yesterday. I got out of that one, that one, and that one completely. I went that one. So this here, if you remember last Friday, I took an aggressive drawdown control position on this one. That played out very nicely yesterday. So I closed that one out there. And as I closed that one out there, I closed out this one as well. So if you look at the P&L on it, pound CAD. So there's your pound CAD. So I made just over $2,000 on that aggressive drawdown control position, which is that one there. And then I used $600 of that to close out this position completely. So that's now gone. Then price pushed down a little bit further and then started to flag. So I took that one off completely and used the profit from that one, which is there, $816. I used half of the profit of that one to completely close out that position there. Yeah, so this is aggressive drawdown control being done. So we had 1, 2, 3, 4. You can't see that one, but it's this one here. 4, 5 positions on it. The aggressive drawdown control allowed me to bank $1,800 and close out a lower position. And then I closed out another position and used half of the profit on that to close out that position. So I'm now left with just 2 positions on the trade, whereas I had 5 before, and I've banked around about 2%. Yeah, so still in it short. Got short targets to the downside. Still short it. That's fine. So one of two scenarios is now going to play out on this trade. It's either going to push up, which is fine, because what I will do is take another short, bring the average up, and then manage those three positions, or I won't, the EA will. Or it's going to push down, and the EA will just get me out of those two positions as we push down into these propulsion gaps to the downside. Yeah, so there's a good example of drawdown control. Right now, though, there's nothing to get into. It's not extended. So there's no reason to take any mean reversion trades on it at the minute. Morning PM, Gay Rats. If the US Fed up the interest rates, then the yen pairs will go down. Difficult to tell at the moment. In theory, yes. What tends to happen when we get some strength in the US dollar is we tend to get a little strength carried through into the yen. However, this move that we saw Friday, this is all JP Morgan stuff. Where's all the yen stuff? It's all back here somewhere. Blimey. Seems like ages ago. There's a lot happened, isn't there? So this is all the stuff that caused the yen problem. Policy shift might happen in the next 1.5 years, since the possibility of underlying inflation rate reaching 2% is not zero. It's all very cryptic. Policy review period of 1 to 1.5 years does not mean that no policy changes will occur during that time. So basically what Japan said was, since 2016, we've had a negative 0.1 interest rate. We might put our interest rates up. So everyone was like, ooh. And then they came out and said, in the next 1.5 years. Oh. So basically what they're saying is inflation looks like it's going to be going up in Japan, which isn't going to be good. It means that they should, as everybody else is doing, put their interest rates up, but they've decided not to do it. They've decided to maintain easing, including YCC, etc. So basically, it was a case of we can see doom and gloom on the horizon, but we're not going to do anything about it. So the market, obviously, Euro Swiss ADR. So there's an ADR on Euro Swiss. So basically the market obviously completely jumped ship on the yen on Friday last week. They don't appear to have any confidence in it whatsoever at the moment. So it's a case of, with all of these, I've got a couple of yen pairs short at the moment on the CAD yen and the pound yen. So I'm waiting for this to undo, but this could well be one of those moves where it just goes sideways and then runs away. The Japanese will come out and they will say something else about it. And you will probably find that the money will flow back into the yen. Whether or not it comes back in on Wednesday with FOMC, I don't know. So it's very difficult to tell with what's happened with this yen. What we might get is just a lot of that with the yen pairs, rather than getting what we would expect, which would be some strength to come through with the US dollar. So we'll have to wait and see. Very difficult to call the ends at the minute. What was the reason for shorting the pound CAD at that level for drawdown control? It was exhausted. So basically we had this big strong push. So we were like 1, 2, 3, 4, 5, 6, 7 days. Yeah. And then we went sideways. Right. So we then put in this stop run of the high, and then look at the wicks there. Huge big wicks to the upside. So as we did the stop run basically of the highs, that's when I took the short, and the stop was up here. Literally, that's it. We're exhausted. That 4 hour. Exhausted, embedded. We're above the 80 level. Look. Yeah. There's lots of reasons. Just, you've got divergence going on. But yeah, just exhausted and needed to do something about it. That was it. So there's no... With aggressive drawdown control, you are driven by what situation an instrument is in. The pound CAD was at around about 3%. So it needed some aggressive drawdown control done on it. So I did it. When you hit the button on an aggressive drawdown control position, you basically look at what you think is potentially going to unfold next. So when I got into this position, where is it? There, look. We just flown through that high, look. Yeah, and it had started to come. You see when my entry is there. So that candle there, that down candle. So we pushed up really hard and I took a short. That was it. Stop was up here somewhere. I have no clue whether it's going to work or not. What it is if this position works, which I've got a 50-50 shot of and no way of telling, brilliant. If it doesn't work, I get stopped out. I've been stopped out on a couple of other aggressive drawdown control positions on this, on the pound New Zealand previously. It's just, there's no particular reason. Just it was a liquidity run and I took a short. But exhaustion. Whenever I take aggressive drawdown control, the only rules for aggressive drawdown control that I have are and these are more guidelines than rules. Ideally, it wants to be at a previous high, because there is a high probability of a bounce, or a exhaustion point where the EA is going to get into a trade and I'm going to take another one there as well. Every time you get a reversal alert when you're shorting, there is a good chance that this is going to be the start of the pullback. We don't know, because obviously that we just can't tell, can we? So you don't know whether it's going to work or not. The idea of an aggressive drawdown control position is to bring this average up. It's either going to be the one or it's not. If it's not, you're going to get stopped out. But there's no rhyme or reason specifically that I have. I don't have a rule. It's a case of, this looks like a good spot. It's the same as any trade you take, yeah? Regardless of what system, strategy, or whatever you're using, every trade you take has got a 50-50 shot. Literally, it's either going to go up or down through time. So when you press the button, it's either going to work or it's not. When it starts to work with aggressive positions, I pull my stop down. So as it moves down, I pull my stop down and reduce the risk on it. So if it's not going to work and it's wrong, the risk is reduced. So the only real danger is when I get into a position, it immediately flies against me. Then I take not a massive loss. I'll take somewhere between 0.5% to a 1% loss on the trade. Most of the time, after a reversal alert, we get at least some kind of push down, in which case then the stop gets reduced. So you just reduce your risk on them. Not too tight, because obviously we know the market does this and it takes stops out. So you've just got to hope that it's the right spot. But if you're taking one at a previous level, you've got a chance of either a double top or a liquidity run. Those are going to put the odds ever so slightly more in your favor than 50-50. So I wouldn't take one. Let's say, for example, it had pushed up here. I wouldn't just take one here. I'll just get in there because I want to. I get in because something has happened that I know historically has a chance of being a reversal. So I might see, let's say, for example, this is a good example. Yeah. So let's say, for example, I hadn't taken the trade there. And what I saw was at this candle here, yeah, what I saw was that bearish candle close, and I saw those 4 wicks. I would have taken an aggressive drawdown control position there. Why? Because there's 4 hours it's tried to push up and failed. 4 hours. It went like that. I can't get through that level. So to me, that is a brilliant spot to take a reversal, take an aggressive drawdown position, because I know that I've got 4 hours worth of buyers not able to make any progress. There's a high probability the sellers are going to take control now because the buyers can't get any further. So that would be a good spot to take it. Could have taken it on that candle or that candle. Yeah. So we had a big, strong push up above a level. Then the next candle was an indecision candle. It was an inside, well, it was a lower high and a lower low, but it was a tiny spinning top stroke doji, indecision. The buyers couldn't make any more progress. That would have been a good candle to take it on as well. But I don't also wait for a reversal alert. As you can see, there was no reversal alert there. There might have been on 5 minute, I guess. I don't think there was actually. Yeah, there's no reversal alert there, look. So just basically getting in because of price action looking good. A lot of luck. There's a lot of luck involved in aggressive drawdown control. But, you know, you've always, whenever you are in the position of having to do an aggressive drawdown control trade, you have one massive thing on your side. The market is stretched to hell. Remember elastic band theory from the bootcamp. By the time you need to take an aggressive position, this thing is stretched. It's moved so far and hard against you, you need to take an aggressive position. The fact that it's done that means that the chances of your next position being the one is high because it's already overextended above what it should normally do. Look at the 4 hour chart on this one as an example. Yeah, it's not just extended above. We're embedded. We're embedded since there. Yeah, what normally happens is we get a push and a pull, a push and a pull, a push, maybe an M pattern pull, push and a pull. What we got here was a push, stuck, price going sideways, divergence. We had divergence starting to form on the move. You know, there's so many things saying this looks like a good spot, but not one, you know. And, you know, if you come in here long enough, you'll see me take loads of aggressive drawdown control positions that just don't work. I'll get 3 or 4 aggressive drawdown control positions, all will fail, and I'll lose 2% of the account. The next one will work, and it will get me out the whole lot and pay for it all. I don't know which one's going to be the one, do I? If I knew that, I wouldn't have taken all the other ones before it. So there you go. Diamond. See, this is where you blow my mind in terms of how to do drawdown control. I tend to sit through it and wait, and I'm in 2 to 3 times longer than you. If I could consistently bank profits on entries like that, I wouldn't need to position trade. Exactly. I wouldn't either. If I could take trades like this only, I wouldn't need to position trade, would I? Because I'd be getting it right all the time. But you can't get it right. But like I say, the thing that is always in your favor when you're getting into an aggressive drawdown control scenario, like all these here, there's 2 trades on. Look, maximum number of trades on right now is 2. When I'm doing aggressive drawdown control positions, typically there's somewhere between 3 to 5 positions on. Normally 4 to 5 positions, or 4 to 6 maybe. Yeah. So that's where I am. And the drawdown on the individual trade is sitting somewhere between 2 to 3%. So because of the very nature of me needing to do something about this, we know the market has pushed hard and it hasn't had a profit take, because if it had a profit take, I'd have been out. So I know that there's a very good chance the banks are ready because they went further than normal, a squeeze. Yeah. And that's what the banks do. They squeeze, and we see them undo it. And this is a really, really good example. When I got here, when I was sitting here yesterday, the P&L on the pound CAD yesterday was sitting at $800 plus. I could have closed the whole thing out for $800 profit. But I didn't, because I'd done drawdown control on the way. So I wanted to pay for all the drawdown control as well. So I decided just to bank 2%, which pays for all the drawdown control that's been done. And now every piece of profit that's made on this trade, as it comes down to here, is all going to be net profit. So, but, you know, look at how quick that move was. There. Bang, bang, bang. 4 hours straight down. and I've said it in here many times, yeah, we climb up the stairs, we fall down the elevator shaft. Yeah, so this put in a move from high to low of 135 pips. That's 1.5, 1.33 basically ADR in one 4-hour session. And this is why, this is the whole premise of keeping your average within ADR. All you need is 1 day of profit taking of an ADR in your favor. You're done. And that's why our aim is to keep our average within ADR. If you can keep within ADR, you know you've got a very good shot of getting out of a position. When you get into positions and you see your average sitting down at 175 ADR, that's when you think, I need to get an aggressive drawdown control position on because my average is too far away. And if today is the day, I'm not going to get out. That goes into the decision-making process as to whether to do an aggressive one or not as well. So, and this is why I keep saying, people say, can you do this with the EA? Can you do that with the EA? The EA would be better if it did this, that, and the other. The EA is a blunt instrument to get you into positions. You are a trader. You are the one watching this thing. You have to make these decisions yourself. There's no AI that can do this at the moment. I don't know, 3 years' time, we might all be redundant. And if that's the case, we're all going to be multi-billionaires, because if an AI can do this, then why the hell do I need to be trading? Why does anybody need to earn? Yeah. If an AI could do this, no one would ever need to work again. At the moment, that's not the case. So you've got to manage these positions and make these decisions. And there's no easy way of deciding it. You've just got to do it and experience it and live through it. And at some point, it just gets easier and better. But I have loads of losses. Yeah. I had a 12% loss, didn't I? Week before last week. I can't remember where it was. There's 12%, negative 12% in there. And 5% of that was aggressive drawdown control positions gone wrong. I think there was 3 or 4 aggressive drawdown control positions in that 12% loss. So the EA had scaled out at 6%. I had screwed up 5% of aggressive drawdown control. Yeah, I'm not perfect. Nothing's perfect. This is a random moving thing that has no way of predicting future direction or time it's going to take to do something. Everything is random. So I am randomly going to have aggressive drawdown control positions that work, and I'm randomly going to have aggressive controlled positions that don't work. I don't know which ones they're going to be. So I just have to take them. So, I can build in some kind of mechanism to decide it, but is that the mechanism that you want? I don't know, because every time I look at the aggressive drawdown control position, I'm in a different position in my portfolio. So I don't know whether I want to do one or don't want to do one until I look at the chart and think, right, this thing's shot. And that comes with experience, isn't it? So there's no simple fixes. I'm beginning to change my mindset with drawdown control and treat it as a friend. Exactly. This is what I'm loving this. Since I've set the EA up to do drawdown control as we go, I'm finding it so much more comfortable doing aggressive drawdown control myself, because Aussie New Zealand out. Right, there you go. So right, just quickly covering that point that we were talking about in the Telegram group this morning. So just to highlight these trades: entry, entry, entry. Right, there's your first exit. Yeah, so this is with the EA, right? This is just to explain why sometimes the EA may not close out all positions. This is where the EA triggered and said, right, close my trades. That is where it got filled on the second one. That is where it got filled on the third one. If you have too much data coming through on that candle and you have 28 pairs all trying to execute orders at the same time and do analysis at the same time, it may be that some of those processes don't get completed. You can see there, those 3 trades should have all closed out exactly the same spot, but they didn't. They closed out quite a big distance away because of the speed of that candle. That's why, when EAs, and not just my EA, when EAs in general do something weird, it's normally because of something that's happening in the market, like platform freeze. Nothing you can do about it. If they want to dump 1,000 ticks of information through to you in 1 minute instead of 10 ticks of information, your machine needs to do 1,000 times more calculations. And if you've got 28 pairs wanting to do those 1,000 calculations, that's 28,000 calculations. If it's designed to do 280 calculations in a minute, it's not going to do them. Yeah, processing power. There's nothing you can do about it. So there's a good example, though, of that 3 different trades. They should have all closed out exactly the same spot. I'm glad they didn't because they made more money. But yeah. Anyway, pound New Zealand looking like a good buy. Same with the trend. Yep, potentially. So obviously, New Zealand dollar is pushing off the back of the Australian dollar news. This is a lovely, lovely trending pair at the moment. We've got this high here, which has just been taken out. So it's pulling back down now. If we're going to carry on trending upwards, we're looking for a 24.72 bounce. Yeah. So somewhere in this area, potentially for a long position. It's not extended yet. Hourly probably is. Just about getting extended now on the hourly. So yeah, same as that. We're looking for a long trade. And it's this last week's low as well. So beautiful support we're at right now. Yeah, so that's last week's low. Beautiful rejection. Look at that. 3 candles. Again, talking about drawdown control or just taking trades in general. Confluence. Price came down, yeah, at a rate of knots. We landed in a previous propulsion gap that had been tested. We landed there, filled the propulsion gap, and then pushed away. The next candle pushed down, pushed back up again. The sellers were not able to drive below that level that they were not able to drive to below before, yeah, because this is where the buy movement started, this propulsion gap. Pushed away, came back down, pushed away. That is a beautiful long. Is it going to work? No idea. But that is Confluence. We've got a previous propulsion move that started a buy for what? 1, 2, 3, 4, 5 days roughly. We tested that level, rejected it. We've just tested it twice and rejected it. That is where I would look at aggressive drawdown control if I needed it. If I was long on this from there, for example, had too many trades on, I needed to get in aggressive, that's where I'd take it. Stop just under that low. Obviously, look at what they're doing now. They're just running the liquidity on that low, aren't they? Yeah. Everybody that saw that went long. Let's have a look at what the retail sentiment is on it. Pound New Zealand. There is no retail sentiment. It's neutral. So there's no reason for them to drive this in any direction at the moment. So, but that's a good example. Look, you know, you're just looking for price action, something to tell you that this is probably it. When you say things like chances are high, always try to reconcile that with you have a 50-50 chance. Seems contradictory. Yeah. There's always the chances of you. When I say the chances are 50-50, what I mean is when you press the button, there is only 2 things that can happen. Yeah. That's the 50-50, right? When you press that button there to go short, it's either going to go up after you press the button or down after you've pressed the button, and it's going to move through time. When you get into a trade that has confluence of previous levels that have been respected, you have an RSI that is extended, which we know often is an exhaustion level, and you have a reversal alert, and you have long wicks to the upside. That's the confluence when I say the chances are high. The chances of it going up and down are always 50-50. The chances of this being the turning point will be slightly higher if you have confluence on your side of other things. So building the case, you're a solicitor. Should I sue this guy? Have I got any evidence? What's your evidence? Right, well, previously when we got here, it bounced. Okay, brilliant. We've got 2 whacking great wicks to the upside and tweezer tops. Good. That's excellent. The RSI is extended to the upside. Fantastic. So there's 3 pieces of evidence there that show that this is a good one. If you haven't got any of those 3 pieces of evidence, your chances are guaranteed to be 50-50, aren't they? So it's just about putting something in your way. Daily charts is another thing you can use. We have a 3-day cycle typically, or so, 3 to 5 day cycle, where price will often push for 3 days and then pull back, or push for 3 days and then it will do a 5-day push and pull back. 1, 2, 3, 4, 5 pullback. Yeah. So at that point there, we'd had 5 days worth of push. So if I see an hourly chart that's gone up for an entire week, probably going to come down. Have we hit the weekly range? Yes. Another confluence. Just add as much as you possibly can to your case, basically, for this is it. And then hope, basically, is all you can do from there, isn't it? But the odds are always 50-50, aren't they? Unfortunately. Death spiral on the DAX. Woohoo! Certainly is. I haven't even been watching. Very nice. So that's your 5-minute opening range. So your ORB long on the DAX this morning was a stop out. Your short is ADR. There you go. So when we were looking at the DAX this morning and I said there's way more downside because obviously where we are at that monthly high, which is basically that all-time high, basically. Not all-time high, but yeah, it's lovely. Now, remember this down here as well. We've still got that gap fill to do. Yeah. So that is still unfinished business down here. So we'll see. I'm not sure. The other thing to bear in mind with the DAX as well is we've got the euro rate coming up. That's some ECB news just coming in there. Banks tightened credit standards more than expected in Q1. 38% of Eurozone banks reported a fall in demand for credit from companies in Q1 as well. So that was the S&P news probably that caused that drop. But yeah, so bear in mind, obviously, on Thursday, we've got the Euro news coming up, ECB press conference and the finance rate. So if the Euro pumps, the DAX will probably dump. So we've got on Thursday, in fact, I might just take a speculative. Or do I want to? I told myself, right, I took out 2 Fiedel crests, $2 $250,000 dollar Fiedel crest challenges at the weekend on their 2-for-1 offer. I told myself I wasn't going to trade indices on them. I was going to use these purely for support resistance based strategies that I quite often run. And I wasn't going to trade the DAX. But after seeing that DAX rejection up at that high, looking at that as a potential stop loss and that as potential reward, it really, really looks good. So I am actually going to take one. I could probably get a better entry than that, actually, because we're at ADR. But so 6.79 short. 7. Off. So just taking a DAX short on the hourly. Stop loss there. Assuming that is it. That's the rejection. Yeah. Target is gap fill, which is basically 152.08. Second. Wow, that's a long way back. I'm on my oblong monitor, so. Big drop in it. 650. Yeah. So yeah, it's a good look at. There's a massive risk reward. If you look at the risk reward on it, that trade. So it's the three and a bit R down to there. Either work or it won't. Obviously, like every trade. But there's probably going to bounce back up into there if we are going to get another leg down today. This is a good bounce point as well. Look, we're at a weekly low. Yeah, so that is your high from that last 2 weeks ago there. So potentially it's a decent level. We've respected it multiple times in the past. Potentially a good bounce point, and then looking for that M pattern to be put in, and obviously challenge that low, and then off we go to the downside. Right, RSIs. So there's tons of RSIs to get through today as well. A lot of these hourlies, I'm on the 21 RSI now on the hourly. I think the volatility is going to start to come back in now. A lot of these hourlies you're going to find are Australian dollar related, so we'll whiz through all of them quickly. Aussie dollar CAD. So we've got a previous high here on the Aussie CAD. That's that's 2 weeks ago high up there. So potentially that is where we're going to look for a bounce. We've got a previous propulsion gap up there as well. Well, that's kind of tested. That one's probably the one that is the more solid of the two. Canadian dollar, we've got FOMC tomorrow, and we've got unemployment claims for the Canadian dollar on Friday. So the Canadian dollar's got a very good opportunity to power up as well, which again, obviously, is going to drive that back down. So this range that we've been in, there's multiple levels to this range. So we've got that high there, which is the last month's high. We've got 2 weeks ago high, which is there. That's last week's high, which we've just driven through this morning. So the range basically could be any of those levels, and we can obviously see that is 100% the low. So this is the monthly 3 weeks ago low, 2 weeks ago low, etc., etc. This is the low, isn't it? So where we are now, that's a good looking short. Obviously, if this Australian dollar isn't going to continue to push, which we don't know yet. So that would be a lovely short opportunity there. Drop down M5, M15, look for reversal alerts, look for some kind of structure break. We're 200 ADR on this today as well. So there's potential for that to turn on that reversal. We've got a nice M pattern forming there as well. So looking good for a short, but we don't know what's going to happen with the Australian dollar moving forward, obviously. If the Canadian dollar is going to power up with the US dollar and we get decent CAD unemployment on Friday, this thing's going to come back down and retest those lows again. So good looking opportunity for a short. However, if it doesn't play out, you know where you're going. So you get in here, the potential there, there's a potential there, and there's a potential there. So just measure the distances. If you're going to take one on the ADR reversal right now, for example, you're looking at 89 pips back up into there, which is 1.5 ADR. So just plan your entries. If you take one there and it doesn't work out, maybe get one in there and then wait until you get up to there for your third. Otherwise, you're going to have way too many trades on. So good short opportunity on the Aussie dollar CAD. Aussie dollar Swiss, again, same thing. Euro rates coming on Thursday. If the euro rates go up to 4 instead of 3.75, we're going to get a massive bull run on the euro. The euro is going to drag the Swiss franc with it. This thing's going to come down like a rate of knots, back down into that low down there. We've got really good balance that we're in now. So this is a really, really nice tight range or area of balance. So we had price discovery coming down into this area of balance, new price discovery, which has just failed. Yeah, so from here, we're either going to reject it and try and test that level again, or we're going to break back out up into these areas, propulsion gaps to the upside that we haven't tested yet. So all the way up into kind of there really is an obvious spot. Other than that, depending on what happens with the euro on Thursday, we could have a big drive down. So again, nicely extended on the hourly, not extended on the 4 hourly yet, but you probably find it's going to, yeah, it will be extended when the next candle closes. So good opportunities for shorts there. But again, all these Aussies, bear in mind, this is a fundamental shift. We weren't expecting interest rates to go up. They have gone up. So there's a good chance that this could just go into a kind of flag break move like that. However, if the euro rate goes to 4, the Swiss franc will probably be more powerful than the Australian dollar. So even if the Aussie dollar does continue to push, that Swiss franc will probably be way stronger than it. So it'll probably come back down. So the Swissy will out trump everything when money starts to flow into it. Same as the yen does, same as the US dollar does. So all the other currencies basically will get run over regardless of how strong they are. So good potential short opportunity on that one. But again, if we just get a 3.75 on the euro, the market has already factored that in. We may see some weakness start to pile into the euro because they were hoping for a 4 and they didn't get it, in which case the Swiss franc will drop. That will continue to pop. So just be careful. Aussie dollar yen, off the charts, this thing. Just done some drawdown control on that one this morning, as you can see there. Beautiful propulsion gap, targets to the downside. Obviously, the yen has been massively weak. The Australian dollar's just had some fantastic news, hence this has obviously popped again. 150 ADR. No profit take moves at all now for 450 pips. 4.5 ADR move with no profit take whatsoever. So this is obviously massively extended. We got above the 80 level. We got up to 84. The 4-hour chart, we're up at the 85 level. If you look at the 4-hour chart and how often we get up to this sort of level, it's rare we get above the 80s. When we do, and we occasionally you get these squeezes, but it's rare that we get up to these sorts of levels. That's the last time we had something similar occurring or there. Yeah, this is where we are now. So yeah, we're looking for that pullback move to start. So good chance that's going to happen now on the 4-hour RSI extension up there on the Aussie yen. But they are piling out of this yen, and this Aussie could well continue to strengthen up. However, obviously, there's a much bigger chance of a profit take move coming. How big it's going to be, we don't know. What if the Fed raises to 0.5? Then the US dollar will go through the roof. I don't think it will. Very unlikely. But we weren't expecting the Aussie to raise the rates either. So, yeah, no idea. But basically, US dollar will go skyward, 200, 300% ADR. Pound New Zealand weekly RSI coming off 70. Don't look at weeklies at all. But yeah, weekly RSIs, if you want to look at them. I don't even have an RSI for weekly. But yeah, take it if you like it. Pound New Zealand is extended on the daily. There's that resistance bounce potentially playing out, but it's in a big strong uptrend at the moment. The pound, basically, if we're going to go up to 5% interest rates on the pound, that's going to be bullish pound as well. So we need to wait for the rates on the pound, which are, I believe, they next week. Yeah. So next week we're 4.25. So next Thursday we've got the pound. There's no forecast in there yet, but it's going to be a 4.5, maybe a 4.75. If we get that potential for that move to happen, by then the New Zealand dollar will have calmed down, because the Australians will have had the initial burst of money into the Australian dollar and the New Zealand dollar off of the interest rates we've received today. That will put the pound in control. So a nice pullback, like we said, on that pound New Zealand back into that ADR on New Zealand dollar CAD as well, back into that 24.72 area over the next 3 to 4 days would be lovely, and then pop it from there. So yeah, Aussie dollar yen. Huge extension. This is now what, 1, 2, 3, 4 days solid up. Yeah. Remember, 3 to 5 days typically is what we tend to see before we get a pullback. Back there, back there. So looking good, but you know, you're playing something that's had an unexpected interest rate rise against something that is like crazy weak because the market's lost all faith in the yen. It's the perfect storm, isn't it, at the moment? So just be a little careful. 2 positions on that. Spread your positions out, obviously. So that's 130 pips. ADR on this is 99. Yeah. So the positions taken on this at the moment are 130 apart, 1.3, 130% of ADR on those 2 entries there. Because couldn't get a second one on, obviously, because it was just too strong. So that's Aussie dollar yen, Aussie New Zealand. I'll catch up on the chat in a sec. Just get through these Aussies. Aussie New Zealand, that's the one that's starting to come down. So this is the one that's got the most chance of actually dropping. We've had the reverse alert on M15 already here. So there's a gap fill to do as well. I just want to quickly check the Aussie New Zealand on another broker. That's just Robo Forex. There's no gap there. So yeah, I mean, this one has got the best chance of coming down because the Aussie and the New Zealand will be dragged alongside each other. So as the Aussie dollar starts to weaken off the back of this initial pump, the New Zealand could well continue to drive, and obviously that will come down faster than the other Aussie pairs. So that's a good looking reversal alert there. You've had the M5 as well and the retest already, but you know, this could just be flag. Less likely that the Aussie New Zealand will move though. And Aussie US, huge extension. One short already on that one on the H1. So this is hourly RSI extension. M5 reversal alert, mean reversion. There's the entry. There's the reversal alert. There's your M pattern. And there's your target. So that's all the Aussies done. Gayrat, IMF governor announced that the US dollar lost 6% in 2022 in using as international trade currency. Does it impact in volatility in Forex in the future? I don't know. I don't know what's going to happen with this. You know, the talk of the Brazil and India and Russia and China all not using the US dollar anymore as their chosen currency. Yeah, I mean, it's going to have an impact in US dollar strength, but you need to look at the trade relations between the countries. So if you look at the currencies that we trade, the Australian dollar, the New Zealand dollar, the pound, the Swiss franc, the Canadian dollar, and the yen. Yeah. The only ones that do an awful lot of trade with China out of those are the Aussie dollar and the New Zealand dollar. Yeah, so those two do an awful lot of China trade. So it may be that those two are forced to transact in other currencies apart from the US dollar, but the rest of us, probably not. Certainly not the Canadian dollar, certainly not the pound or the euro. Yeah, we will all still be using the US dollar as our prime currency. The yen is manipulated like crap anyway. So that's more likely to fall in line with the US because Japan does not want to use the Chinese yuan as its main currency. So when you actually look at the main Forex crosses, yes, there'll be a little bit of weakness, I think, probably in US dollar strength. Volatility, though, no. Volatility won't be affected, I don't think. The amount of money that's driving through and affects the average daily movement is going to be the same. If it's less on the US dollar, there'll be less on the pound and less on everything else, won't there? So I don't think volatility, but strength in the US could be affected, yeah. But we'll see. We'll see what happens. You can't predict the future on what's going to happen with that sort of stuff. What happens, happens. You just have to manage what you're in. Fed meeting is important. The market really expects J-Powell to talk about a pause or a cut in the next months. Yeah, I mean, there's FOMC is basically all about the press conference. Yeah, what happens here is irrelevant. Yeah, if that comes out at 5.25 or that comes out at 5.5, it's kind of irrelevant. The market's factored in 5.25. If we get 5.5, we'll get a big spike. But what we will then get is listen to this and see what the forward guidance is. If they go up to 5.5, for example, and they say this is it, and the market's done that, it's going to do that. Because, yes, we are nice and comfortable there at 5.25 or 5.5 being the best place to put your money, but only for a short period of time. So the market will always factor in 6 to 8 weeks ahead, 6 to 12 weeks ahead, really, of movement. So if it foresees in the next 3 months the Fed reducing interest rates, I think they'll probably look less favorably on the US dollar. It's taking a lot of good news to move the US dollar at the moment. We get good news on the US and we get a little bit of a push. Another bit of good news, we get a little bit of a push. We get one thing which is ever so slightly negative and it collapses. The market is just waiting for that short opportunity on the US dollar. And I just get the feeling this is it now, 5.25. I have said that at 5, though, because the Fed keep changing their mind. Until they get inflation under control, properly under control, that's when they will start to reduce the interest rates, I think, as this, another quarter, maybe 2 quarters of 1% drops. But the other thing they've got to factor in as well is if inflation drops below 2%, that's going to be very, very bad. So they need to get this down as fast as possible because it's got very, very high. They need to drop it twice as fast as they put it up, which, again, weakens the US dollar dramatically. So I think there's a kind of a free fall on the cards with the US dollar, but very difficult to decide how and when that is going to happen. So I was just watching the DAX. Watch that area on the DAX, potentially. We've got that little gap fill there, but potential shorts out of that. That's the break on that area there. Right, RSIs, other RSIs, CAD yen. So I'm just going to quickly whiz through all these yens. We know the story with the yens. CAD yen is starting to come down nicely now. Very nicely. So 4-hour extended and embedded up at the 80 level. Hourly, nice extension. You got a couple of monthly levels there. That's the previous month's high. Yeah. And that is an older monthly high as well. So we've got this area here, that little bit there as well, that area there. So that is potentially where we could get a bounce on this CAD yen. So if we can get down to here for FOMC, there's potential that the CAD could drive further with the US dollar, depending on what happens with the US dollar rates. So it's a nice mean reversion at the moment, but don't get too greedy on it. Watch this level. Got that area there as well, but I'd be watching that area like a hawk. So this, we've rallied into it, we've rejected it, we've tested it again, we slammed through it on this yen. If this is going to be a continuation long, I'd be watching that, and we may not come back down and retest this area. This might all get left orphaned and we're off. So good looking short opportunity on that one. Swiss yen starting to come down nicely. Where's my pound yen not coming down? So yeah, that's coming down very nicely at the moment. Nicely extended. Again, be careful. Euro rates going up on Thursday. So that area there, potentially for a bounce. So don't get too greedy with your shorts. I've got a CAD yen short on at the moment, and my target is 102.21. So my target, you got a big round number on this. Yeah, there. That is your big round number. So I'm targeting just above that. So what I'm looking for is I'm going to watch price action here, potentially take some of that position off. But that's where I reckon we could get back down to and retest that 100 level. So all this price action you see here is actually testing the 100 big round number. We just exceeded it, came back, hovered around it for a bit, dropped. Came back to it, exceeded it, bounced off of it a couple of times, dropped. I think there's a good chance we could retest that 100 level. So I'm targeting just 20 pips above that at the moment on the pullback on that one. The Swiss yen, as I say, that one target probably down to that resistance there, which will turn support. Hourly, you can see the targets. Yeah, so all these targets here. We've got this one here, which is already tested. That's the initial move. So there's your accumulation break. All depends whether or not this yen has any kind of strength in it. We've got no way of telling. Euro yen is the other extended hourly RSIs. So extended and embedded on that one. Done a bit of drawdown control. Got a short on that. Lots of targets to the downside. Same thing as the Swiss yen, that one. The pound yen is the other short. Your targets on that one are here. That's your propulsion target. So we pushed up, high. So that's last week's high, previous week's high. That's the propulsion move that broke that level up into there. So looking for a pullback down into that gap. And then obviously that can go where it likes. Next Thursday is the news on the pound. New Zealand dollar yen. Again, these are all extended on the 4 hours as well, obviously, massively extended. Just taking out the monthly high and rejected. That's a good looking short. I've actually got an Aussie yen short on at the moment, which is basically the same thing. Look, it's the same trade, the Aussie yen short as the New Zealand yen short. It's just in a different place. So yeah, potential drop all the way back down into this area here. So you can see the previous resistances drawn by the indicator. That one there, that one there. That's also the same sort of area. So pulling back down into there as a target. Could go deeper, should go deeper really, but it all depends again on this yen, what we can get out of this yen. So that and that is your obvious targets, which fills that propulsion area there. We could leave these orphaned. Don't know, all depends how strong that move against the yen is going to be moving forward. And the US dollar yen, hourly RSI extension embedded. Got two shorts on that one already. 4 hour RSI extension. You got your monthly high coming up there. That was last month's high. That was the previous month's high. So again, good reaction back down into that resistance there, which should turn into support. However, we've only got until Wednesday, tomorrow evening, and then this thing is taken off one way or the other. So short term on this, need to kind of try and be out as soon as you can with these USs. Other things we got extended are New Zealand dollar Swiss. So that is extended on the hourly. So big, strong push up there. Only one target on that, which has been tested there. That was an overnight candle though, so that's not really a test. So there's your propulsion target to the downside. Smaller one there. We've just filled this massive propulsion gap target and just about extended on the hourly. So I'd like to see that get a little bit further extended before I got interested in that. That's where I think we're headed, back up into this accumulation. There's your break of the accumulation. So up into there somewhere, I would say. But at the moment, we just extended. So potentially pulling back for a push back up into there. Again, euro on Thursday. If we get bullish euro, that's going to come down like a house of cards. So just bear that in mind. You've got pound New Zealand also extended now. So that's, we looked at this one earlier for the hourly. So there's your level just been hit. So that's that previous resistance. Yeah, we came, bashed through it, pulled back out of it, back into it there. So this propulsion gap fill, that's where I'd like to see it get down to. That would be ideal. If we could get down to here, by next week, I think that could be a beautiful long coming all the way back up to retest that. If we get interest rate rises on the pound, which we will do, and then they come out and say we are doing this, this, and this over the next quarter, and they're clear about interest rate rises up to 5% over the next sort of 2 to 3 months, we could see some really good, strong moves on the pound. So pound New Zealand at the moment getting to a point where potentially it could bounce back up into, that's already done. That's the only propulsion gap targets you've really got open to the upside. Tiny little one there, but no real upside targets that I would look at and go, yeah, that looks great. So it's either going to become a range in there, or we're going to push down into this area, and that's where I'd look to long it. Pound odd, that's obviously screaming down on the Australian dollar. Getting exhausted now, though. So lots of downside targets on this still, but obviously there's your big one. Looking for it to pull back up into that accumulation, which is the break, and then potentially retest and go back down again. And euro odd, same thing as the pound odd. So nicely extended, long on it. H1, M5, mean reversion, back up into there. Second entry down there if necessary. Same as the pound, basically. So both of these are the same trade, the pound odd and the euro odd. They're either going to go from here and just fill, or there's your previous day's low and yesterday's low lines there. That'd be your obvious target to fill that gap. Or they're going to push down, in which case then you'd be scaling in somewhere down here, waiting for a pullback. Lots of opportunities, lots of stuff, very, very, very extended. So, right, that's all I've got for you on that side of things. DAX is pulling back still. I watch that area for shorts. DAX, yeah, gap fill, basically. So it's just rejecting that low at the moment. So this CAD yen's just broken that low of Asia. So we've just got a reverse alert on that, and we're taking out the Asian low. So potential push back down into there today. Okay, that's all I've got for you today for this morning. I'll be back tomorrow morning at 7:50 and 2:20 this afternoon for the New York session. Be in the Telegram group as usual if you need anything else. Just keep an eye on your exposure on these Australian pairs, just in case we get a continuation squeeze. I get the feeling looking at these, they're starting to weaken quite a bit at the moment. So they are all starting to sort of unravel. So I get the feeling we might actually get this done today. Well, I don't know, 150 ADR. It's quite a big ask, actually, to drive it all the way back down to source today. But I think there's a chance we might get some continuation moves back down to the downside. News-wise today, obviously, just bear in mind we've got the CPI figures coming out in 20 minutes. So they're only estimates. It's the flash estimates. But they do give a guidance. And sometimes if these are miles out, they'll be off the euro. So just bear in mind we got that today. We got low speaking later. So this might be the catalyst this afternoon at 12:20, where low basically undoes this move. So if we get some sort of bearish comments coming out, we might find this entire Australian move is an A-shaped recovery. So that's potentially what could happen today. We don't seem to be seeing a massive continuation push in London. It's over. So be a bit wary. Well, actually, I mean, they're obviously good opportunities for shorts, all of these Aussies. So potentially we got some good afternoon movement on that. Jolts this afternoon at 3 o'clock, half an hour after the market open as well, but I'll be on for that. And then we got the unemployment to look at this evening for the New Zealand dollar. So bear those in mind. Monkey Man, please build me an EA based on yesterday's YouTube trading nut video. No idea what that is. Don't know. Why don't you fill out the form on the website with all the details? Yeah, there's a big form here. Strategy automation request. So put in all the information that I need in there. Explain the strategy. Provide any indicators. Got to be the source code indicators, NQ4s. And I'll have a look at it. Okay, have a good one. Anything you need, let me know in the Telegram group. Otherwise, I'll be back this afternoon at 2:20 for the New York session. Have a good day.